You can do everything right. Build the profile, fix the behaviors, prep the documents, and still get denied because you walk into the wrong lender for your stage. Lender selection, it's a strategy. And today, you get the map. My name is Justin. I'm not your typical CPA. I focus on business growth and finance. Let's go. So here's the big idea. You did the 90 days. You pulled your business credit report. You opened those net 30 accounts. You fixed the consistency issues. You kept the bank balances low. You didn't close old accounts. You didn't spike utilization. You did everything right. And then you went to Chase, and Chase said no. Here's what nobody tells you. Chase rejects 87 out of 100 small business applications, not because businesses are bad, but because Chase is not built for the stage that your business is in. You didn't fail the application. You just applied to the wrong lender. And let me tell you that ends today. I'm giving you the full lender map, every funding source ranked by who is the most likely to approve you based on where your business actually is right now. Check it out. So let me paint you the picture. You build your whole business credit profile over the last 90 days. You do everything right. And then you walk in to your local big bank branch. You have your suit on. You have your folder under your arm. You're ready to go. And you sit down with the loan officer and they look at your file. They type on their keyboard for 45 seconds. And then they reply, "We're going to have to pass on this business loan." How does that make you feel? I bet you're driving home and you're pulling out your phone and you're Googling, why did I get denied for this business loan? But Google has 47 different articles. Every single one gives a different answer. And so you go to bed convinced there's something fundamentally wrong with your business. That's not the case. So before I give you the rankings, you need to understand something that changes how you're going to think about the entire process. So right now in April 2026, SBA 7A loan rates range from 9.75% to 11.75%. The same credit score, same loan program, same month. The lender determines the rate, not just the approval, the rate. The PLP secret, the single biggest factor in how fast an SBA loan closes, is whether your lender has a preferred lender program status. Nobody really knows about PLP. So PLP lenders have authority to make the final credit decision without SBA review. They don't need that extra step. So this cuts weeks, even months off the timeline of your loan funding. Most business owners have never even heard of the PLP. Now you have. Some lenders fund in 30 days. Others take 90. Same loan, same borrower profile, different lender. Choosing the right lender isn't just about approval odds. It's about whether you get the money while the opportunity still exists. So your tier one lenders are your CDFIs and your micro lenders. And I'm starting here because this is one of the best funding sources in America. And it's specifically designed for the business owner who's been told everywhere else. CDFIs stand for Community Development Financial Institutions. They are nonprofit lenders backed by the US Treasury that exist specifically to fund businesses that traditional banks won't touch. So if you're a new business, minority-owned business, business in undeserved community, lower credit scores, limited history, CDFIs will fund these types of businesses. The most active CDFI for SBA microloans right now is Action Opportunity Fund. They go beyond the loan. Borrowers get financial coaching, community access, and education. They evaluate the full picture of your business, not just your paydex score, not just your tax returns, you, the entrepreneur, the businessman or woman. So if you want to find your local CDFI, go to cdfifund.gov and go to the link Find CDFI. There are over 1,300 different certified CDFIs operating in the US, and I guarantee one's in your city if you look. So if you've been told no by a bank, CDFI is not your plan B. CDFI is your plan A because that's where your business is at right now. Go find your local CDFI. Tier 2, your community banks and your credit unions. Here's a stat that will change the way you think about banking. Community banks and credit unions approve small business loans at significantly higher rates than the big banks do. They have human underwriters with discretion. They care about your story, not just your algorithm score. And they have relationships with SBA that make the process so much faster. Big banks, big banks run your application through a system governed by AI. Community banks, community banks look at your application with the eyes of a human. The difference is an algorithm versus a person that's making the decision on your business loan. So that's why a 680 credit score gets denied at Chase, but it gets approved at your local community bank. Same score, same file. Human discretion changes everything. I know, the vibe of walking into a bank in 2026, it feels like showing up for a fax machine convention. But I promise you, the human on that other side of the desk, that human has the authority that a big bank algorithm does not. So make sure to use that human. Credit unions often have the lowest rates on business loans of any lender type. And because you're a member, not just a customer, they have an actual interest in your success. This is a community banking at its best. Make sure to use community banks and credit unions for your business funding needs. Tier 3, SBA loans. SBA loans are the best product in American small business lending. Lowest rates, longest terms, highest amounts. A 7A loan can go up to $5 million at a rate of between 9.75% and 11.75% right now. A 504 loan can fund commercial real estate and major equipment. A microloan can get you up to $50,000 with more flexible requirements. There's no better structured lending product for small businesses in the country. But, and this is the but that kills people, the SBA doesn't lend to you directly. You apply through an approved lender. The lender you choose changes your timeline, your approval odds, and your rate. Here's the PLP secret. Find a preferred lender, program lender. A PLP status means the lender has authority to approve the loan without waiting for SBA review. That's the difference between a 90-day approval and a 30-day approval. The minimum bar for an SBA 7A loan is a 780 plus credit score, 2+ years in business, consistent revenue, complete document package. If you don't have all four, SBA will be next year's goal. Remember, start with Tier 1 and Tier 2, and then you can move on to Tier 3. CNBC just confirmed SBA loans take up to 3 months to get approved. The 90-day blueprint that was covered in last week's video, that's literally the lead time that you need to get an SBA loan. Start building that today. You apply in 90 days. The timing is not coincidence. Tier 4, business credit cards. Very important. And this tier gets overlooked because most people don't think credit cards are business funding. They should. A business credit card with a $25,000 line is a $25,000 line of credit that you can access today with no loan officer, no bank statement review, no approval timeline. For business owners at the early stage who need working capital and have a solid personal credit score, the fastest way to get funding is to personally guarantee business credit cards, and it comes from a legitimate funding source. So here's the move. Apply for business credit cards from issuers that do soft pulls on your credit first. American Express, Capital One Spark, Chase Inc. These all do soft pulls. Once you get the soft pull approval, do a hard pull approval. And keep your utilization under 30%. Pay them early. And you can get lines of up to $50,000 to $100,000 in 3 to 4 different cards. And now you have a revolving credit facility that reports to business credit bureaus and positions you for the next tier. So the secret most people miss: business credit cards issued by American Express, Chase, and Capital One report to business credit bureaus, not just personal. Every on-time payment builds your paydex score simultaneously. You're not just funding your business, you're building the profile on your business for that next business loan. Tier 4, online lenders. Online lenders like Funding Circle, OnDeck, Bluevine, Fundbox, they can put money in your account in 24 hours. No branch visit, minimal paperwork, quick decisions. For businesses that need fast capital like equipment or a payroll gap, opportunity that expires tomorrow, online lenders solve a problem that a 90-day SBA process cannot. But, and this is the but that you need to respect, the speed comes at a cost. Online lenders charge much higher rates than SBA loans or local community banks. You're paying for convenience, speed, and flexibility. That's a fair trade if you know what you're getting into, and if you have a clear plan to pay it back quickly. So here are my 3 rules for using online lenders. 1, use them for short-term only. Short-term, equipment, inventory, payroll gap, something that can be paid now but doesn't take that long to be paid back. Calculate the total payback amount and not just the rate, because that will compound. And never use them to fund operating losses. You will compound the problem. Now, online lenders, they typically require 1+ years in business, a 600+ credit score, consistent monthly revenue, and no recent NSF fees. Now, here's the data selling trap. One Reddit business owner applied to one online marketplace lender and got 20+ calls in 48 hours from lenders they never contacted. Be careful with who you put your information out there with. This has also happened to me, because they'll call you and email you 10 to 20 times a day. So I'm not an online lender. I'm not anti-online lender. I'm anti-uninformed borrower. So there's a big difference. Funding Circle, OnDeck, Bluevine, these are all real, legitimate lenders. They can fund your business very quickly, but you have to know what the cost is going in and have a repayment plan from day one. If you have all this in line, then it's a tool, not a trap. So here's the bigger picture, and here's what's really happening in America right now. As of April 2026, private credit markets are tightening. SBA loan rates are between 9.75 and 11.75. 87% of small business applicants are rejected by big banks. That's just the truth. So CDFIs, community banks, credit unions, and targeted lenders, they fund the rest. The difference between the people getting funded and the people getting denied, it is almost never about the quality of their business. They have viable business. It's almost always about information, access, knowing where to go, knowing where to travel on the map. The veteran who came home and built a landscaping company, the Black-owned barbershop in Chicago that's been in the community for 15 years, the Latina entrepreneur in San Antonio who built a catering business from nothing, they all deserve access to the capital to help them scale their business. And the only wall standing between them and that capital is just knowing which door to knock on. So you just got the map. And maps are meant to be shared. So you can see that finding the right lender is very important. So utilize the information that I just gave you to find the right fit for the right lender for your business at the stage that your business is in, and utilize the information to get that approval. So if you've gotten any value from this video, drop a fire emoji in the chat. And don't forget to hit that like button, smash that subscribe button, and leave a comment so we can get this video out to more people. To your success. Salud.